Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob here. And guys, this one is going to tell you all you need to know. We're at the top and everybody's broke. Let's dive in.
Trade Genius.
Well, Bob, did you enjoy yourself?
Yeah, just for the people listening, is that I went and spent from Thursday till today out in Black Rock Desert at a experimental rocket launch activities. Over 300 rockets were fired. There was no limitation on height. Somebody tried to get into space, but their rocket blew up on the launch pad. It was gloriously spectacular, and so we had a lot of fun. I tried to trade a little bit on Friday, but it's too distracting. And then today I was driving home. And this is the flattest, most desolate place on Earth. Beautiful Milky Way. You can see end to end. The playa is aligned in September to the Milky Way. So you can go look end to end and you can see it from horizon to horizon. That's how big the playa is. So a lot of fun. I'll probably go again next year. But I'm back. I don't think I missed too much being back Friday and Monday. The markets are gearing up for the end of the quarter. And we'll talk more about that probably tomorrow. But Phil, this is some interesting charts here. The one I want to put up first is the dumb money chart, because everything I read on Twitter is that you're an idiot if you're bearish, because all the past histories tell you that, when this happened, we should be green for the next 12 months, blah, 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 blah. Goldman Sachs talking out of both sides of their mouth. They post one set of data saying that markets go up after the first rate cut. Then they do another one showing that the markets go down after rate cuts. So all it is to me is they're confusing people, and look where the dumb money is. This is all you need to know. When the dumb money or / retail gets heavy into the mix, which they are now, recession occurs. And last time I checked, bull markets don't last through a recession unless it's the first time ever, Phil. What do you think about this chart? I got one more for you after this.
Well, what I think is, whenever you get a major market bottom, right, and that's that blue area there, right, you can follow the first surge in, because that usually kicks it off. But you don't want to be in the late stage cycle. And we're not only in the late stage cycle for this, we're also in the late stage cycle, I believe, in the business cycle as well. And that's why you're seeing the rounded bottoms on things like unemployment. So there's two things here that are where we're at the point in time where you just don't want to be flooding in unless it's extremely short term. Like if you believe we're still going to have a little bit of a blow off, you can get in here. But normally ETF flows are not short term. These are guys that are contributing with a long term horizon. It's just telling, because this is nothing new under the sun, right? Retail always piles in till the very end, and they're very emotional. And right now, I think people are going to be doing the same thing, as well as when we have our positive year to date at the end of Q3, which unless the world ends here in the next few days, that's going to be the case. It rolls over again into Q4 with that wealth effect as they're maintaining their exposure, and it requires more capital to go back to work to maintain that equity exposure because the percentages are growing. So much like what we saw last year. But however, unlike last year, now we've got the yield curve has uninverted, right? It's gone positive. Now we're in that 0 to 0.6, which is your final window historically. And markets go right up into that. Once we hit that 0.6 threshold, Bob, I think I'm going to be probably in cash for the most part.
Yeah, and you and I will do it a little bit differently. And you and I trade differently. So it's Phil has different asset classes that he focuses on. But for me, I'm going to be heavy. I'm still going to keep my energy exposure, Phil, because I think it's going to be more of a great rotation than just an all-out market crash. Because when I show you this next chart, you'll understand why. And we have the pair trades are going to keep things pretty stable as well. But look, this is the chart. It blew me away. I was driving this while I was actually a passenger. I couldn't do this while I was driving. But when we were driving back this morning, this chart popped up at me, and this is the biggest deviation. See, this is the curve. This is the Fed devaluation of our wealth curve that they've been following now for decades. And what we did here was we absolutely blew it out. 7% deviation from the trend line. And somebody said something really interesting, because now that thing's starting to kind of collapse in on itself just because of the sheer weight. He said, hey, look, this money's already spent. It's not like people took this largesse and went ahead and saved it for a rainy day, although a few of us did. Now we have a situation where the Fed guys are wringing their hands saying, well, we think inflation is going to be lower than we thought. And that means these guys are going to try to prime the pump here, Phil, because they're allergic. They're allergic to any negative inflation print out there because they know once that takes hold, just like Japan, we're going to go into it. And the interesting about Japan is we follow Japan, on a cycle of delay, and it's all because of demographics. And I think once this takes hold, we're going to have a pretty pernicious deflationary event here in the markets and in the economy, I think. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, they don't want that line to break because their whole system is designed for inflation to continue to grow, and that's the way the modern financial markets work. That's also how the wealthy continue to maintain their wealth and grow their wealth. So yeah, that's like mentioning cancer if you talk about deflation. Now I think you're right in terms that the CPI, that's why they don't ever talk about returning inflation or at least getting some backwardation on inflation because, we're up a lot of things are up 30%, right? From COVID in terms of costs, right? So of course, US CPI is what this chart is, but they'll be content that this kind of goes sideways like you said, right? And I thought that made a lot of sense. And this will catch up over the course of about probably 4 years, but they really don't want to see this have a hard mean reversion back down to that line. It's going to be more about that line catching up. So if you guys are thinking, things are going to go back to the way they were in terms of costs, maybe to a certain degree, but I don't think it's going to be like it was before. And this is by design. So you're going to have to get used to that. However, I don't think the rating of increase is going to be what it was either. So I think we're just going to have to get kind of like the new normal, right? And we go through this. If you've been around a long time, you know that we have these spurts of where things go up in price, and then gas, right? Used to be dollar something for a long time. Then it was $2 something for a long. You get used to it, and then you have these surges up to like $4. So maybe the $3 gas is your new old $2 gas, right? But we're all going to get used to it.
Where do you live, Phil?
Hey,
$6
all over.
gas, I'm gonna have to get used to it,
I can tell you Hawaii is the worst.
Yeah, we're right with you, brother. So yeah, what's really interesting to me is we're going to see the bifurcation. Phil, restaurant chains are going under in droves now.
That's a big difference.
What's that?
I said that's the big difference to me in this cycle as small businesses are getting choked out. And I blame stagflation, right? Because input costs aren't coming down and the consumer can't keep up with these inflation rates.
No, and for you guys listening, you have to understand when people tell you there's going to be no recession, it's just because they're looking at nominal data.
Right.
If I raise the price of everything up and shove more money in the system and you can't keep up, that's a recession for you.
Right.
But they get put on TV, hey, we're growing our GDP. Well, no, you're not growing your GDP. So, it's a problem. In fact, when I was at the rocket shoot, I was having this conversation with everybody. Inflation is on everybody's mind right now, Phil. Everybody. So it's going to be really interesting. Whoever picks up the next presidential mantle is going to have really interesting choices ahead. Kamala is going to try to go down she's going to do it ass backwards and end up blowing everything up because she's going to create shortages. And Trump's going to go ahead and he's going to try to cut off the foreign people and try to bring employment here, but he's going to have short term. Either one of them gets elected, Phil, inflation's going to spike with these guys. And people don't quite get that yet. It's just that who do you think is going to have the better long-term plan to right the ship? Right. And but right now people are not happy.
Yeah, I totally agree. Again, like you said, business cycles are greater than the Oval Office. There's only so much that they can do, but they've already, and the problem there too, Bob, is that, and both sides of the aisle have done this, is that they've already kicked the can in all the various ways that they could have. So you're right, like this next administration, one way or the other, and you're right, it's going to be like, what's the long-term solution going to be? Because that's, either way, there's going to be short-term pain to endure. That's unavoidable at this point, given what's been happening over the last 8 to 10 years. And, like we've been beating this dead horse, it's been 15 years since you had a recession. You're probably on the cusp of one at this point.
Yeah. And guys, I think one thing that we've learned in this environment too is that we're just going to take this a trade at a time. You got to be positioned. I think when the yield curve uninverts like it is, TLT is a trade you have to be in.
Right.
And you already talked, Neil Kashkari is already talking about another 50 basis point reduction at the next Fed meeting. So they know they're behind the curve here. And somebody said the soft landing there's no way it can be soft landing at this point. So it's going to be really interesting to see. And look, it ties right into our January thesis. 2025 is going to be an abortion.
Yeah, and then if you recall, I think we posted it, but when you have a 50 basis point as your first initial cut, right, the 1, 2, and 3 year returns are really, really bearish. And so you get that. That's why, again, I think we have that potential for that Eiffel Tower, right? It's this final move up and then all of those forward returns. And basically because the Fed is being defensive because they are preparing for, an economic slowdown. And that's usually why you get the 50 over the 25.
Nope, I agree, and it's going to be a big issue. But hey, we have trades for this, so come trade with us. TradeLikeAGenius.com and TradeGenius.co. Stocks, crypto, ETFs, options. You get in a room that you think is going to help you best, and then we'll help you navigate the markets. Thanks, Phil. Glad I'm back, and then I'm here until we do our training in October, guys. So we'll see you tomorrow.
See ya.
Trade Genius.